This is Matthew Cratter from Trade University, and today I want to talk about some candlestick patterns that I've found over the years to work really well. If you want to learn trading strategies that work in today's difficult markets, or you're just interested in seeing what I'm trading or investing in, be sure to hit that subscribe button. So a quick review of how candlesticks work. This is what a candlestick chart looks like, and you'll normally see them in red and green. A green day is just where the open is below the close. So it looks like I can't draw on this page, but the open is the bottom of this rectangle, the green rectangle. The closing price is the top of the green rectangle. The green rectangle is called the body of the candlestick, and then you have the wicks on either side. There's a wick at the bottom, and the bottom of that wick shows you the low price for the day. Let's assume these are daily bars or daily candlesticks, and the top wick shows you the high for the day. Now, a red candlestick is just this is identical. You have the low and the high. The only thing different is that it opened above where it closed. We can take a look at an actual candlestick chart here so I can draw on it. If we just pick a random candlestick right here, we can see, for example, that this candlestick, we opened right here at the top of the red body and we closed at the bottom of the red body for the day. These are daily candlesticks. We can see that there's a tiny little wick here at the top, but that most of the day it basically opened near the highs and closed near the lows. So let's talk a little bit about a candlestick pattern that I found to work really well. This is called the shooting star, and we have an example of one right here. Now, a shooting star will be characterized by a really long upper wick, and we measure long relative to the body of the candle, which is the little green thing here. This green, the body can be red or green. That doesn't really matter. What we're really looking for is a very long wick. And let's think about what this tells us. This tells us we can see, for example, this was an earnings day. We gapped up. We opened right here at the bottom of this candlestick, of the body of the candlestick. We closed right here at the end of the day. And then during the day, we did a little bit of an excursion. We went all the way down to the low of the wick, and we also went up to the high. But something really interesting happened, and this is why shooting star candlesticks can be quite useful. Once we traded up here, it looks above in the sort of 171, 172, 173, there was a rejection of the price by sellers. Sellers came in and drove the price back down such that we were only able to close a little bit higher than where we opened, hence this very long wick here. And that tells us that there's a cluster of sellers up here, and they need to be overcome before the stock can move higher. So I like to use candlesticks like this, shooting star candlesticks, and you can see it's called a shooting star because it's got the long upper tail and the body. It's a little bit stylized, but I like to use these for short-term, multi-day swing trades, especially if you want to go short. So again, this was a great example of, this was January 26, 2021. This is Johnson JNJ. It gapped up on a good earnings report. It rallied and was unable to hold those highs. So what I'll often do is I will short the stock, which means you borrow the shares, you sell them, and you basically, when you're shorting a stock, you want to sell high and buy low. I will short the stock at the end of the day, right near the close, maybe 5 minutes before the close. I'm trying to get very close to the final price of the day, the closing price. I will set my stop loss at the top of the shooting star. If the stock were able to rally and especially close above this top wick, that would mean that all of these sellers, all of this wall of sellers had been worked through and the stock was ready to move higher. So it's a really natural place to put your stop. You can measure the distance here between the close and the top and use that to size your position. So if this is 2 points and you want to risk $100, you would buy 50 shares of stock, for example. Now, what I will often do is I will play the mean reversion back down to one of the moving average lines. A good one for these short-term trades is usually the 20-day moving average, which is this blue line right here. And we can see that once we got the sell signal, the stock traded back down. It mean reverted back down to the average. Mean reversion just means something moves back towards the mean or average. And we found very good support. We can see we found good support right at the, we were able to close above the 20-day moving average here. And so that's a natural place to take profits. You can try to get a little more juice out of the trade by looking at where previous resistance and support levels were. And so, excuse me, the way to do that would be we could see previous to that earnings report the 160 level right here, which is this line right here. It goes all the way across. Was resistance. It was sort of a ceiling. We managed to close above it one day. The stock sold off, and then it was able to move above that key. These big round numbers, they often have a lot of options open interest associated with them, and so they are important both from a psychological perspective and also from an options hedging perspective. But either way, this functioned as resistance. This was a little bit of a ceiling. We were able to get above it, and we tested it a couple times. That 160 level held. We can see right here it held, and it also held here. So that becomes the new support level. So that would also be a natural place. If you want to get a little bit more juice out of this trade, you'd go short here. You could either cover, as we said, once it touches the 20-day moving average, or you could wait for a retest of this key 160 level. And we can see right here that it successfully closed above it 2 days in a row. It gapped up, and then it was off to the races again. So here we're talking really only about a 3 or 4, 5-day trade. And I wanted to show you this because this is a way of using not just a candlestick, but also using support and resistance levels in conjunction with a 20-day moving average. Let's take a look at another one that this is GPS, this is gap from a few years back. This is one of my favorite examples from March 1st, 2019. The ticker is GPS. The red line here is the 200-day moving average. The blue line is the 50-day moving average. Whenever the stock is trading below the 50-day moving average and or the 50-day moving average is below the 200-day moving average, in other words, whenever the blue line is below the red line, that really is a sign that you're in a downtrend, and that the natural direction for the stock to take would be downwards. Now, we had a very interesting earnings that happened at the beginning of March. The stock gapped up not just above the 50-day moving average, but above the 200-day moving average, and looked very strong for much of the day. But then two things happened. You got this very long wick here. So this is obviously a daily shooting star formation. And you have a, I said that the body of the candlestick doesn't matter. It matters. I would say it's secondary to the length of this wick. But the interesting thing here is there was so much selling pressure that the stock actually closed below where it opened. That's why we have a red body here. And so this was a very good short signal. Again, you could take you could put your stop loss. You could basically go short at the end of the day, put your stop loss level if the stock traded intraday above the top wick, or if it closed at the end of any day above the top wick, that would be your stop loss level, and you would play it back to the sort of mean reversion we were talking about. You could either, if you wanted a really short-term trade, you could play the mean reversion back to the 200-day moving average. If you wanted to get a little bit more aggressive, you could play it back to the 50-day moving average and then cover your short. You could also just continue to swing trade it. Maybe you you use the 200-day moving average as your trailing stop, and in that way you would hold it. You would hold it actually a little bit longer. And we can see that the failure of this gap up on earnings really led to a collapse of the stock. It moved from approximately 30, 29 or 30 all the way down to 17 or 18 once you had this failure. And this failure occurred after a very good earnings report, and it also occurred on really high volume. We can see here at the bottom. So either way, the key in trading is trying to get the best entry point that you can. Once you have a good entry point, you have the luxury of taking profits fairly soon or using a trailing stop and seeing if you can milk the trade for a little bit more. Once this happened, the downward momentum was obviously confirmed, and this became an amazing trade, almost a 50% move down, slightly less than that. If you enjoy reading charts like this, if you want to learn how candlesticks work and how these various indicators work, I'd encourage you to check out my course, Price Action Trading. This is available on Trader University Premium. I'll put a link to the description notes below. And in this course, I talk a lot about candlesticks, pin bars, trend reversals, bearish engulfing candlesticks, bullish engulfing, basically everything you need to know to make money from a price chart. Now, the good news is if you join Trader University Premium, you not only get access to that price action trading course, you get access to all 15 of my courses, including my introductory course. If you really know nothing about trading, if you want to learn how to short stocks, if you want to learn how the bid and ask work and all these basic concepts, this course will really take you from A to Z. I also have a course on day trading. I have a more advanced course on momentum stocks, as well as some courses on trading IPOs, trading options, trading futures, swing trading with options. If you want to do something similar to what a lot of people did with GME, buying call options on GME, I show you how to use both calls and puts to leverage up and increase your returns on stocks and other asset prices. If this is something that interests you, click the link in the description notes below. It'll take you to this page, and you'll be able to click on any of these boxes. You can click on one of these boxes, and it will take you to the list of courses, and you can see the list of lectures within each course. And if this is something that interests you, you can scroll all the way down to the bottom. If you'd like to get access, click Get It Now. That will take you to the checkout page. Normally access to all 15 courses, including my list of favorite momentum stocks for the week, is just $125 for 30 days access. But because you've listened this far, I'd like to give you a special coupon code. If you scroll down right here where it says have a coupon code, you click YT99, click update, and they'll take $26 off. So you'll get access to everything for just $99. You can watch all the lectures, take notes, and then cancel before your subscription renews. There are no long-term contracts or anything like that. But you can join for 30 days. You can join for 60 days. You can keep your subscription open as you work through the courses, or you can watch them all within the course of 1 month and then cancel, and you won't be charged again. If you have any questions while you're working your way through the courses, you can always, you'll have my contact information. You can ask me your questions. And you can also give me your suggestions. If there's something missing that you'd like to see covered at Trader University Premium, you can let me know, and I'll make a course just for you about that topic. And then I'll share it, obviously, with all the other subscribers. And in this way, I hope to make this really the best resource online for learning how to trade, learning how to invest, and learning how the financial markets work. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.